We scored these top players in business banking products for customer conversion, with the worst of the bunch scoring an F, 41% out of 100, and the best only scoring a B, 81%. Can you guess where everyone fell in the rankings? Some quick context, I'm Kaylee, head of growth at Solo. I work with hundreds of fintech programs to help them compliantly skip steps in their account opening process and pre-fill a customer's data that's already been shared before with their consent. The outcome? Improving conversion and unit economics without compromising a sponsor bank's CIP policy and compliance standards. We're scoring fintechs across the industry with our conversion scorecard. It's simple. We go through the actual application end to end with real business owners, and we assess across these 4 primary categories. User effort, weighted at 40%, application time, weighted at 20%, decision speed, weighted at 25%, and outcome transparency, weighted at 15%. We do this to understand where the industry has an opportunity to pre-fill or fully remove work that already exists on a customer, either from their own ecosystem or our network of 240 plus fintech and bank partners. So let's get into what we found. One overarching takeaway of the business banking group, this category mostly solved decision speed, still hasn't solved the application though. 4 of the 6 fintechs we reviewed gave us a decision in less than an hour. 3 were effectively instant. The decision speed was definitely there. The application itself was a very different story. The best application in this category asked for at least 20 separate data fields. The median was in the high 40s. Best in class is defined as 10. The worst of this bunch asked for 56 individual data fields, 8 document uploads across multiple devices, and it even included a step where I had to go to a government registry, create an account, pay for a certificate, and then re-upload that certificate back into the application. They had the best compliance process by far, but unfortunately, it came at the expense of the user. So yeah, you can get approved for a business bank account in sometimes as little as 90 seconds, but that's after 25 minutes to an hour of manual data entry. Another takeaway. Your application is not just competing with other fintechs, it is competing with the day-to-day life of a business owner. Even with dedicated time and a prepared dossier of business information, we experience what many business owners do. Throughout the application, a lot is going on. I am in a million Slack threads. I've got 20 different tabs open across 3 different windows. 3 meetings are happening at once. I think I have the right lease agreement, but actually it's outdated. I have to go hunt down my chief of staff, who is also in a million meetings and in a million Slack threads. Then I need to bring in another beneficial owner to KYC. She's on back-to-back product and sales calls for 3 hours straight. The reality is, even the most prepared applicant is handling a million different things. And you're basically asking them to reassemble this fragmented record every single time they need to apply for something. And this is in the midst of operating a business with its daily demands that you really can't move around a lot of times. Let's talk about what the best player in this category did get right. The simple answer, it asked for the least amount of user effort. The shortest application we completed asked for 28 fields across 8 screens. It was done in about 5 minutes. It required 0 documents, 0 account connections, 0 follow-up tasks. They scored perfectly in application time and another perfect score on decision speed. However, they also did 0 KYC or any real KYB from what the user could see. I am sure they checked with like third parties on the back end or something, but as far as assembling a CIP record from this application, I would be shocked if they were able to do so when a regulator came calling. I'm also really curious how many accounts they've had to shut down after they pushed people through so quickly without real KYC steps. Their conversion was so great, seemingly because a lot of the diligence steps one might expect they weren't fulfilled, they were just fully missing from this application. Now, another thing I have to give them props for, this application remembered us within the scope of the application time. So for example, I put in my name, email, address, first thing. I didn't have to rekey that across multiple fields within the same application. It pulled through to the different screens. You would actually be shocked at how that didn't happen for everybody. Now imagine if they could apply that same experience, but not just with what I provided in this application. What if that applied to any information I provided to any trusted party within the span of my financial and business relationships? More on that in a second. Now it's time to look at the lowest of the bunch. Now I have to add a disclaimer because I am a huge fan of what this fintech does, and their process is leaps and bounds, like light years ahead, by far the most comprehensive from a compliance perspective. So cheers to their compliance team. They've got to be getting in like the best customers, best quality, and I would be shocked if they had to shut accounts down after opening them. However, it does come at the expense of customer conversion, and I'm sure at the economics of their funnel. This fintech scored a 41 out of 100. That's an F. So let's talk about why. They asked for 56 data fields with 8 document uploads and that government registry that I mentioned, and almost nothing carried forward. I uploaded documents that contained the exact information that I then had to type out in a manual form. The system couldn't even read what it had been handed. So unfortunately, they also got points docked for redundancy. We also have to talk about the document pile up here. It wasn't just 1 or 2 that I would expect. It was a whole stack that required me to talk to multiple different people on my team. So not incredibly user self-sufficient. I guess if you are like a solo 1-person team truly, then maybe you have everything on hand. But I had to go talk to the sales team to pull sales contracts to verify operating activity. I had to go to the chief of staff again for an updated lease to confirm my operating address. And I even had to go to the founder herself in the midst of her very busy schedule to verify her personal address with 2 utility bills. Your New York driver's license still has your old address on it. It's a conflicting one with the current one.
That's caused problems. It's my ex's address. My personal address has caused so much drama in my life. I should just go to DMV if I had time. I have a bill. Okay, I found a bill. It's a business bank account and they want my personal utility bill. I mean, good for them for really KYCing.
So that was a whole thing. And this is after I had already approached the application with a set of documents prepared for it. I still had 25 minutes of just running around trying to wrangle people across our busy startup. So within this application, I had to complete all of these specific process steps. I verified my business entity with an EIN letter and articles of incorporation. I verified my operating address with the lease agreement. I verified my control person and KYC'd them with proof of address, verified with 2 utility bills, identity document capture, and a selfie video for biometrics and liveness check. I also proved operating activity with our sales contracts. I proved good standing with a government certificate that I had to go pull and pay for myself from a government registry. And I also filled out enough questions about the business that I could have just uploaded a business plan at that point. So the twist with this fintech, they actually tied as one of the best for transparency in their application. It was more honest about the processes and the asks for my information than anyone else. They added these little disclaimers that let me know, this is why we're pulling this, we're required to pull this. And it did kind of abate some of my apprehension about having to jump through all of these hoops. That said, the process was still pretty brutal. Clarity doesn't really save you when you are minute 56 into an application that you thought was going to take maybe 5 minutes. Now, again, they're really great from a regulatory perspective. I want to emphasize their compliance team is probably the most determined team in fintech right now. It just sucks that the weight of this burden was put on the customer themselves. We're going to talk about how we can preserve this diligence without forcing customers through an obstacle course in just a minute. So here are all the scores out of everyone we reviewed. I'm gonna let you guess exactly who scored what, because the purpose of this scorecard is to help our fintech operators diagnose, benchmark, and optimize their performance. We're not in the business to bash anybody, so if you are one of these 6, we're gonna be reaching out personally so you can get your scorecard, the full review, and all of our findings. It's worth noting that nobody scored top marks, which was a little bit surprising. Here's the pattern that showed up across all 6. All of them are underutilizing existing records. If you are a business owner in the year of our Lord 2026, you have a record. And I proved this to be true because just in the process of this review, now my record has been verified with 6 new fintechs and their sponsor banks. As a product lead, there is a way to make this record work for my new customers and prospects. There are 2 major opportunities I would recommend. 1, partner prefill, which activates your own network. And 2, KYB and KYC certificates, which activates our network of 240 plus banks and fintechs. So let's talk about partner prefill first. I did some digging and I found that each of these fintechs has a referral program. Accountants, bookkeepers, payroll providers, vertical software, other fintechs are sending business their way. But a referred customer then starts from a blank form. Somebody your customer already trusts, who has their articles of incorporation, their EIN letter, their business financials, already knows exactly who the beneficial owners are, hands this customer to you, and you ask them to reassemble all of that from scratch. That's a gap that could be closed today by turning your referral networks into real onboarding infrastructure. What we do in this case is create a customer-gated catalog of the customer records your referral partner has. It's a literal index of the information that exists across their systems. Then, using our Collect SDK, when the customer goes to apply for your product after being referred, they'll just put in a few key fields to identify them, and the rest, with their permission, can be pre-filled from your referral partner. With this, the application could realistically shrink by 40 or more fields. So that eliminates manual data entry by activating your own network. And it's available to any fintech today, regardless of your sponsor bank's participation in our overall network. But what about the CIP processes around verifying that data? This is where our broader Reliance network comes in with KYB and KYC certificates. These are bank attested and therefore sponsor bank acceptable sets of Reliance artifacts that let you skip the KYB and KYC steps that were already done by another network member when their bank attests to it and it meets your policy. You can think of it like a TSA pre-check. The customer breezes through because those steps are fully removed from their process if they've already been done to your standards. So you would add a query to your funnel. The customer would complete a few identifying fields, consent to share what already exists, and their application would be pre-filled and fully remove the steps that have already been done somewhere else. Document capture, biometrics, that weird selfie video thing where you have to spin your head in a circle, all of that would be removed. The customer would never have to see those dozens of screens, and you on the back end receive the set of Reliance artifacts that your bank needs to stay compliant. So the TLDR is that your customer would feel like they're skipping the line, but you wouldn't have to drop a single one of those CIP steps. And importantly, with how things are going, you wouldn't have to add friction when you are required to start formally KYCing for your process. So the same standards are met, it's just a fraction of the work for your customer and your team. Now, Partner Prefill is available to everyone, regardless of if your sponsor bank is a member of our network. KYB and KYC certificates are only available to those fintechs whose sponsor banks have joined the network. If this is something that you'd like to see your sponsor bank provide, I would be more than happy to take a call with them. I'm curious to know what you think about where the industry is at right now with conversion weighed against compliance. If you are an operator in this space, I would love to hear from you. We're going to continue with these scorecards every other week, so let us know if you want us to rank next. And if you'd like your scorecard before they go into the rankings, you can request yours at solo.one.